We are in a full-blown war. That is crypto versus the SEC or the United States government, guys. And remember what they say. First, they laugh at you, then they fight you, then we win. We had the SEC come out with a new lawsuit against Kraken and some more clarification on Binance. Binance was the biggest looming elephant in the room for us as a crypto industry. So today, guys, we're going to talk macro, which is one of the most important things and one of my favorite shows to do because it shows you the big picture of where we're going. So what does this mean for you, most importantly? That's what we're going to talk about today, guys, and why this could lead to one of the biggest bull runs in history. This is actually great news. Let's dive into it without further ado. But first, guys, like the video if you appreciate the content. Come on, guys, like the video. Let's get more likes than ever on this video because we are headed into a bull run and you are going to make insane money. And on this channel, we're going to teach you how to preserve that capital as well. So, guys, like the video. And if you're new to the channel, what's up? My name is Kyle Chassé. I've been in crypto for 12 years, bringing you guys everything that you need to know to absolutely crush it in the next 18 months. And guys, make sure that you subscribe and hit the bell notification to get notifications because oftentimes this content is very time sensitive and you want to get it as soon as it comes out. So look at for the calls that we made yesterday on Research Coin. It is up like another 50% from yesterday and with good reason, with very, very good reason. But if you have the bell notification and you watch these things right away, you would have caught it before the pump. So let's get into it, guys. Very, very excited to talk about this with you guys. Macro is one of my favorite things to talk about because of what I just said. Like, it's always good. Even for me, someone who's been in the space for 12 years, I love to always get a big picture of what's going on so we have a good grasp on the time frame of when we're about to go into full parabolic mania. So we had Binance. So this is from CoinDesk. Binance in talks to pay more than $4 billion to end U.S. criminal case. CZ could still face charges, says Bloomberg. So that's the headline here, guys. And let's see, where was my tweet? You can see that this is a little joke, but if you guys aren't following me on Twitter, go do that at Kyle_Chassé. If you guys have seen this, CZ from Binance always tweeting 4, meaning safe, but the $4 billion fine. So we said, so he knew the price of the fine the whole time. But you can see here for Will Clemente, Binance was the biggest idiosyncratic overhang on the market for the entire last year. Looks like we may finally be getting more resolution on it. Markets hate uncertainty and they love clarity and resolution. Similar vibes to BitMEX resolution in 2020. So guys, this whole Binance fund, like what people have been saying forever. We've talked about this on my show a few months ago. Like, if Binance were to come down, and remember, what was this guy's name? Adam Cochran, right? We talked about Adam Cochran and how he was saying that, like, if what his rumor was true, then he didn't see any way that us as a space could ever recover from this dramatic, and like, this is just a pure extortion play from the government, you know, $4 billion, whatever. The point is, CZ can afford this. And Binance is going to be just fine. So this is the biggest overhanging elephant in the room. Oh, hallelujah. Pray on the crypto gods. We're moving past this. So this is very, very, very bullish in my stance here. Another tweet says, you think that if the DOJ and SEC, et cetera, had found something damning evidence that Binance would either Binance was insolvent or committing mass fraud, et cetera, surely they wouldn't be seeking a settlement. Time will tell if they actually settle by end of month. But if they do, full send everything. So this is true, guys. Like, if there was some, like what he just said, if there was mass fraud, if there was a Sam Bankman-Fried incident, you know, spending customers' funds, lack of reserves, whatever, you know, something major, this wouldn't be done with a settlement. It would be full-on criminal court like Sam Bankman is facing right now. So to me, this means all skies clear ahead. So that's the Binance dilemma. Great. And now we have the Kraken drama too. So the SEC slapped Kraken with another lawsuit. Kraken was charged by the SEC for operating an unregistered exchange. This is ridiculous. So USA's top decel, which is short for decelerator, you know, slowing down innovation and progress, is back with another assault on America. The masochists haven't been happy with the beatings they've been taking in New York and are shopping for a different flavor of regulation DOM in California. I thought we settled all of their concerns for $30 million in February. Now they're back for seconds. This is Jesse Powell, the founder of Kraken. And yeah, so, you know, just like stifling in America. And like, this is why I literally, when I wanted to make sure I was like going hardcore into crypto, like I've been in crypto since 2012, but in late 2017, I left America. I didn't want to deal with this. When we raised money for projects, as you guys may or may not know, you know, Master Venture is my company. We're a venture studio, venture builder. We're building different projects in the space. And we tried to stay out of America as well. We mandated, actually. We geo-block America. We don't accept American investors. We don't try to service Americans, and it's just too much drama in there. Why do they want to push all innovation away? Why are they trying to send everybody overseas to places like where I am right now in Dubai, Abu Dhabi, you know, Portugal, friendly jurisdictions, Estonia, like, you know, all these places that are saying, hey, come freely innovate here. Don't stay in America where they're going to try to rape and pillage you for all of your money. So Dave Ripley is the CEO of Kraken. He says, we strongly disagree with the SEC claims, stand firm in our view that we do not list securities and plan to vigorously defend our position. Oh, one more night, two guys. At the end of the video, I'm going to tell you which cryptos were affected by this news today, and you'll see why they were affected in a second, and why I believe that they're good to buy on this dip. And just I'll go into that a little bit. So we'll talk about that at the end here. As we have seen before, the SEC argues that Kraken should come in and register with the agency when there's no clear path to registration. Its allegations are factually incorrect, contrary to law, and the wrong way to create policy in the United States. As an industry leader, we will stand up to these allegations and defend the crypto industry's right to exist in the United States. We believe congressional action is the most appropriate path to resolving the lack of regulatory clarity in the United States, and will continue to support these efforts to bring clarity and certainty to the chaotic environment that has been created in the US. So this is inevitably going for another lawsuit. Kraken is going to defend themselves, and that's a great thing, because eventually what's going to happen, and this lawsuit probably will be dealt with very quickly, because this is very similar to the Coinbase lawsuit that we saw before, that is still undergoing, but you'll see as we get into the story here. So in a new case against crypto exchange Kraken, the SEC alleges that Kraken failed to register as a national securities exchange, failed to register as a broker-dealer, and failed to register as a clearing agency. The SEC further alleges that Kraken's business creates heightened risks for customers, including committing customer crypto assets to its own fiat holdings. The list of cryptocurrencies the SEC lists as securities mirror earlier complaints against Coinbase, Binance, and Bittrex, ADA, Axie, Algo, Atom, Chiliz, Coty, Dash, Filecoin, Flow, ICP, Mana, Matic, Near, OMG, Sand, and Sol. One thing you'll notice is Link wasn't in that list. Wonder why? So let's move on. And yeah, so you can see that. Actually, we'll get into this in just a second. This tweet. Here is the list, guys. I will put a link in the description below. You can check it out yourself. But you can see here, this is the list of tokens named as securities, specifically in different lawsuits by the SEC. And so Crypto Rank over here made a list just so you can observe which ones the SEC has now defined as a security without actually defining them as securities, just naming them in lawsuits, but not explaining why they're securities or anything like that. And we know that the court case before with Ripple was very, very telling. And so I believe that, you know, just like Coinbase hasn't removed these cryptos from their exchange yet, I believe that Kraken also really will not remove them as well. So you can see here, Gary Gensler hits Kraken with $30 million settlement, prompting the outcry of regulation by enforcement. So this is something that's often discussed as regulation by enforcement. There's no clear guidelines still in America for how crypto companies are allowed to operate. They're treating crypto as an asset, the same as they treated the orange groves back in like the 30s or whatever. And no one has made a clear guideline of how to start a project, how to operate a centralized exchange, how to operate a decentralized exchange, how to operate a DAO, how to launch a token, how to fundraise. Like none of these guidelines have been made clear. And SEC is just saying, hey, you should come in and register. But it's pretty ridiculous. So and Jeff Safart from Bloomberg Intelligence says, this complaint against Kraken feels like the same thing as this Coinbase suit to me. Notably, here's another list of digital assets that the SEC is claiming to be securities. There are 16 cryptos explicitly listed here, including Solana, Cardano, and Algorand. And Algorand, remember, if you guys haven't seen the video of Gary Gensler before he was Gary Gensler of the SEC, talking about how great Algorand was and how I believe he even said how it wasn't a security and blah, blah, blah. So it's very, 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 very hypocritical. So Kraken put out a blog and there was a really, really great post. I'll get to it in a second, where you can see actually it covers this by Ryan Selkis from Missouri. But you can see on the blog here, I'll just highlight some of these important things. So the complaint against Kraken alleges no fraud, no market manipulation, no customer losses due to hacking or compromised security, and no breaches of fiduciary duty. Now, Kraken is one of the only exchanges in the world who has never undergone a major hack. None of the customers have ever lost any money. They're very, very compliant, and they've been around since like 2013, I believe, or 11 or something. It's crazy. It includes big dollar amounts, but does not allege a single one of those dollars is missing or misused. No Ponzi scheme, no failure to maintain adequate reserves, and no failure to preserve the identity of clients' funds one-to-one. Indeed, none of these things would be true. Instead, the complaint makes a technical argument that Kraken's business requires special securities licenses to operate because of the digital assets we support are really investment contracts. This is incorrect as a matter of law, false as a matter of fact, and disastrous as a matter of policy. We disagree with the SEC, and the law is on our side. The SEC already tried this theory, and a court rejected it outright. The SEC argued in that case that digital assets bought and sold on trading platforms were really securities transactions. The federal court for the Southern District of New York disagreed, ruling that the SEC failed entirely to satisfy its relevant legal test. The court held that the SEC's unprecedented legal theory was contrary to the economic reality of such transactions. The SEC's case against Kraken will fail too, and for the same reasons. The SEC alleges that Kraken commingled its own funds with clients. This is similar allegations already made in other crypto trading platforms. The SEC cannot and does not allege that any customer funds are missing or any loss has occurred, nor does it allege that any losses will occur. The complaint itself concedes that this so-called commingling is no more than Kraken spending fees that it already earned. So it's basically what Kraken is doing is putting their fees that they've earned, their profits or the revenue into their own bank account, and the SEC is calling that commingling clients' funds with Kraken's own personal funds, which is a joke. I do suggest that you guys go read this on Kraken, blog.kraken.com. It'll be the most recent one. Very, very interesting read. I highly suggest you go check it out. Senator Cynthia Lummis has always been a favor and a pro-crypto advocate as a senator of the United States. Here is her response to the SEC lawsuit against Kraken. She says the SEC cannot continue ruling by enforcement. Crypto asset companies have repeatedly tried to get guidance from the SEC only to be hit with enforcement actions, causing unnecessary harm to consumers. It is time for Congress to pass a regulatory framework to provide clear rules to the SEC on what is a security and what is a commodity. The Lummis-Gillibrand Responsible Financial Innovation Act will rein in the SEC and allow financial innovation to thrive in the United States. This is exactly what we need, ladies and gentlemen. Let's hope that some proper regulation actually gets passed through. Senator Lummis was one of the senators responsible for helping all of the pro-crypto laws in America out of Wyoming. And in fact, Wyoming is like the most crypto-friendly state in America. And, you know, the Americans, the United States was supposed to be pretty decentralized in nature. In fact, there was a great, sorry guys, there was a great interview with Vivek Ramaswamy and Bankless. I suggest you guys go watch that as well if you're looking to get more information on on exactly what Vivek is trying to do as a next president of the United States. I believe that RFK would have pro-crypto regulation as well. But anyway, so that's that. Let's look at this, which is let's look back on the court case of XRP is not a security. I made a video about this when it came out, guys. But here's the key holdings and takeaways. So XRP as a digital asset is not in and of itself an investment contract. Selling any asset, including a digital asset, via an investment contract does not automatically make it the subject asset a security. An arrangement by Ripple to sell XRP directly to institutional investors pursuant to a written agreement, institutional sales, is an investment contract. An arrangement by Ripple to sell XRP programmatically or through trading algorithms anonymously to public via crypto exchanges, aka programmatic sales, is not an investment contract. An arrangement by Ripple to distribute XRP as a form of payment for services for employees and compensation and other distributions is also not an investment contract. In this alert, we provide an overview of the key holdings and share some insights on its potential implications to the state of the crypto industry in the United States. So basically in this discussion, and XRP was pretty much launched and no different from most of these other crypto assets that are listed here on this allegation here. But basically what they're saying here is that any of the XRP that was sold to institutional investors before, like private sale, for example, that particular interaction was an investment contract. There was an agreement and there was expectation of future returns and profits, but the XRP traded on exchanges was not cannot be defined as a security. Therefore, the SEC has no ability to regulate it. And this is exactly what we need to understand for this Kraken lawsuit, is that it'll be treated in court likely the exact same way this XRP case was handled. And Kraken only cares about what's being traded on its exchange. It doesn't care about any of the investment contracts of these assets that were sold to private investors. It cares about what it's doing on its centralized exchange in the United States, which is exactly what this court case has already done and proved. This is why you haven't seen a huge reaction in the market. We had the Binance stuff come out, which is actually bullish for the market, and the Kraken stuff come out as well, which doesn't seem to move the market. Like if this was back in the day, we probably would have seen huge pullback, but now we've had all this kind of clear guidance from the courts. Unfortunately, it's costing taxpayers huge amounts of money. Like, would you stop wasting taxpayers' dollars, Gary Gensler and the SEC, on these stupid court cases, which are probably costing tens or hundreds of millions of dollars that have to come out of taxpayer money when everyone's just trying to literally innovate so America can survive and not literally wither up and die like a prune? Like, what are you doing with your life, Gary Gensler? Just shrivel up and die already, please, or just go retire and move on with your life. Let us flourish. Let the industry grow. Stop trying to fight. We will eventually, of course, we will win. So stop. Stop being ridiculous. Slap, slap, slap. Gary, go away. Okay, next. Good news, more good news, guys, on the macro front. So ARK Invest, Cathie Woods, has just updated its S1 again, amendment number 3, semi-shocker, to be honest, but in a good way. The more updates to these documents, the better. Shows them getting this bad boy in shape for SEC approval. So guys, if you're not familiar, the way that this works is that these discussions are happening literally with the SEC and ARK Invest, their ETF team, Cathie Wood, they're literally having discussions with Gensler. And he's saying, okay, this is going to pass, but in order for this to pass, we need to make sure that we add this language, blah, 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 blah. And so this is good. This is progress being made, and it's probably, amongst some of the final steps. Now, this is going to take a while. So the fact that this third amendment had to come to market before approval leads me to believe that everything is shaping up for the ETF approval on January 10th. We were probably not going to get one before then. We only have about three weeks or so until the holidays. Now, we could get the ETF approval before the holidays. Everybody's going to take time off for Christmas and New Year's. And like I said in videos before, I don't think that the SEC is going to want to come back from, with their hangover from New Year's Eve and then have to go deal with the stuff. They're probably going to try to get as much of this done before they take time off for Christmas as possible. So is the SEC going to bring us a Christmas gift and an ETF approval so we could all have an amazing Christmas and buy lots of presents for our friends and family and be way more rich than we are today? Let's hope so. But what this means, guys, this amendment number 3 literally means that now the other 11 applicants are also going to have to update their S1 amendment as well. And as we saw last time, there was an update to the S1 amendment. It took, a couple of weeks for everybody else to get on it. Now, it doesn't mean that they're going to give them liberally this time to go do that. They could be saying, SEC could be all right, guys, let's go. Christmas is soon. Let's get this done. Let's go. And then they're just going to copy the text from this literal thing that we're looking at. And we could get like an ETF approval, next week or in 2 weeks. The point is, though, guys, is that do you really want to be left behind? And if you're sitting with dry powder on the sidelines waiting for a big pullback, in my opinion, like what I'm doing personally is not what I'm doing, right? Like I have almost zero dry powder left at this time. I am fully allocated into the market. In fact, let's just say that I have some things that are not crypto that I'm trying to sell right now, assets of mine that would allow me to even be more in depth in the market. Now, this is not financial advice. I'm not suggesting that you guys go out and dejet into this. But anyway, that's what I'm doing. Now, real quick, some of the things that and this is just one thing I found very, very, very funny. This is Ryan Selkis from Azari saying that basically Anatoly says, this is the founder of Solana, I want to build super fast tech and a decentralized web that works without intermediaries. Gary Gensler, go straight to jail. And this is in a new SEC filing against Kraken. They list Sol as a security because, check notes, Tolley said that in a blog post that they want Sol to be fast. And literally, if you read this post, like this is a great tweet, go check it out. Literally, Gary Gensler, and they're saying that they're promoting like investment advice or like trying to pump their bags because you're making claims about like as a matter factual claims about the performance of Solana. And so like this is just absolutely illogical. I don't even know how they come up with this. They're absolutely mad, crazy people. So guys, real quickly before we go, Sol has been on a run. I've been, I've been looking at some of my things I can sell to try to reallocate, rehypothecate my bags. You can see right now from the local highs, which was just happened, when was this? Back, a week ago. We have a nice 18% pullback on Solana. Solana is going to be the Ethereum, the BNB of this bull run, in my opinion. It's just has massive ways to go. If we go back and look at the chart, you can see that where we are actually in the grand scheme of things here. You might think that you missed the Sol pump already, guys, but look at from all the all-time highs to where we are now. This is just getting started. It's going to demolish it. So a nice pullback is always nice to try to get in a little bit lower. Now BNB, because of this clearing from BNB, very, very excited here. And I think that, BNB is not going to be like a crazy narrative here now, but it is, right? Because there's a couple things to mention about BNB. So they can continue to burn tokens. They're going to continue to burn 53.85 million more tokens over the course of I don't know how long, but ultimately they've said that they want to get the supply down to 100 million. So the fact that they're going to burn still 53 million tokens is very, very bullish. And Binance's layer 2 built on OP stack is coming out very, very soon. And Binance is still clearly, after we know as of today, going to be the number 1 exchange in the world going into the next bull market. And if people want to get listed on Binance, they're highly encouraged to build on BNB, which means that BNB chain will build. We're probably going to see, again, a lot of run. Now, BNB hasn't pulled back as much as some other crypto, but it's probably going to run with the burning I talked about, their layer 2, and just, how popular it is and demand to use Binance. And this is probably going to run like crazy as well. Definitely a blue chip. It didn't pull back yesterday. It pumped because of the news, but is what it is. And you can see here, we've been talking about Bonk. Like I said, I believe Bonk is going to, a 25% pullback from local all-time highs, guys. So a good chance to get in if you're looking to get in, not investment advice. I am buying a bit more. I do believe this is going to I believe this is going to get listed on Binance. And I believe that it's going to run to at least $1 billion. And we have, it was at $215 million just yesterday or something. And it's down to 179 right now with almost $100 million in trading volume. All right, guys, I'm going to wrap it up today. I hope that you're excited. This is great news for us. Really, really, really great news. I will catch you guys on the next one. See you later. Bye-bye.